Welcome to Charts Today. My name's David Linton, and today's edition for Wednesday, the 7th of December, comes to you from London. And I'm on the tail end of quite a bad cold, so I'm saving you seeing me this morning. But really the key thing yesterday, we had a sea of red on the screen. Oil prices falling below $80 for the first time really this year. So one of the things I want to just focus on today is how low will the oil price go. So we'll look at that, but just before we do, let's just take a quick look at the currencies and what's going on. So the dollar index is back above the 105 level. Of course, the lower dollar does generally help commodity prices. There's an inverted relationship there, but that's not enough really to change what's going on with the dollar. And if we look at the euro, we are just a little bit softer. Remembering this is my weekly, my daily, my 60-minute chart. So we're just seeing that dollar has steadied. Sterling still holding the 121 level. We did get up as high as 123 in the week. So really quite key there that we are just still looking pretty strong versus that weaker dollar. Bitcoin below $17,000. It's steadied around the 16,000 level, but the reality is we are seeing downside targets still to around 9,000 on Bitcoin. The S&P 500 index was down 1.4% yesterday. The Nasdaq also was hit, and we are bearish below the cloud on all three time frames. A little relief rally target there on the 1% chart, but of course these downside targets still dominate, and this does set us up for another downside thrust target, so we need to be aware of that. Looking at the FTSE future, we're sitting at 7,545, just nudging, not far from making new highs, so that's going to be really interesting to see that versus the US markets that are actually looking bearishly. UK continues to outperform, and if we look at the DAX in Germany, we're up just slightly here this morning as well, but having hit resistance on that weekly cloud, so that's going to be quite key as well. Taking a look at Asia, we were down mostly. Japan was down about 0.25%. The Hang Seng was down 3.2%, so we're seeing a lot of volatility there, having had a very sharp recovery. We've hit cloud resistance again there on the daily chart. The other markets that are lower, we're seeing China was down 0.4%. A lot of news flow out of there about reversing the lockdown policies, of course, and India. The Sensex down slightly, but those upside targets were activated, and India has made new highs, so that's really significant. And the Aussie market was down just under 1%, so falling away there. Now, Brent crude, we'll look at the full energy mix in a minute, but I just want to look at the 1% chart, and this is a really we've been bearish on the daily ever since we fell through in June. We are seeing that breakdown from on the weekly cloud. We're not yet below on the weekly cloud, but we are seeing this trend now just very clearly broken, and what was support becoming resistance. But the key thing is what's happening on the 1% point figure chart. And we did have this big upside target. We did actually hit an intraday high of around 140, but we didn't get to the 150 target that was given last year. And then at the top, we had this big downside thrust target to $58. We've got another target here to $60. The one to $89 was quickly met, and we've got two targets here to 70 and 72. So we've got targets basically to 70 and then to 60, and basically that is where we'll go. And we'll look at that now in terms of the shorter term picture. So this is my energy screen here. This is the daily and the 60-minute chart. So we've been bearish on the 60-minute chart this week as we fell through. We've got little mini downside targets here: 78.50, 78.60, 70.70, 78, 73. So lots of downside targets, and again 70, 72. That's on the 0.5% chart, which we've already looked at. So the downside pressure for oil is into the sort of 78 area, which is the short-term area, not far below where we are now. We've got targets to 77. then to 73, but really the 70, 72 area. And then, of course, we break the 70. That's a psychological important level that we've just broken 80. We break 70, and then we're looking to 60 because we've got targets to there. So that's how low oil can go. And I just want to cover that because quite a few people have been asking me. Looking at the rest of the commodity mix, and we'll go back to energy in a minute. We've got wheat sitting fairly steady. That trend is still looking okay on the long-term chart, but we are just starting to break lower there as well. So interesting, we're seeing a lot of these commodity targets coming down. Gold fell back through the $1,800 levels, just couldn't quite hold that, but the reality is it has made the higher high, and the key thing is this now will be the higher low if we go higher still. So interesting that we are seeing gold starting to move, and US 10-year yield sitting at 3.5%, which is pretty amazing when you consider that the federal funds rate is at 4%. So this is at a discount to the funds rate. Now, looking at the energy mix, we've already looked at Brent crude. Obviously, WTI much the same picture, no big surprises there, and the targets will be similar. Of course, we are $6 lower on WTI, so you can just take that lower, and we're seeing here targets already to the 60s there, so quite key as well. Coal is pulling back. We hit resistance really here, so having really relief rallied off that low that we saw in November, we've come back and we've hit resistance, but we are short-term bullish, and we have got mixed targets there, one to watch. US nat gas has fallen away quite substantially in the last week, and we are just seeing here that 750 level was just a push too far. All eyes on $5 now. Will we be able to hold that? And European gas markets continue to surge higher. We've got colder temperatures, of course, in Europe now, but the reality is that turnaround is something we've been talking about for some time. If we move to new highs on TTF, we've got a target there of 151. And of course that is quite a bit higher, and if we look at NBP, we're up 3.5% this morning, and again that's making new highs, and 362 is the target there, so that would be significant. We did nudge 400, so quite key there too. And looking at German power, looking at the cow, we're starting to head towards expiry now, of course, and looking at the excuse me, looking at the 2024 contract, we're starting to see us nudging to new highs there. So power prices starting to break out. We've got upside targets there as well. That's it for today. Until tomorrow, happy charting. See you then.